Hello traders, the title of the video is how to recognize and trade a true divergence trading signal like a pro. Alright, we are recording this video today because a trader did ask me how a question relating to the subject of false and true divergence trading. I have already recorded a video where I was answering the first part of that question, and the title of that video was how to pinpoint a false divergence trading signal. In this tutorial, I want to talk about how one can recognize and trade a true divergence trading signal like a pro. Alright? So first thing first, what is a true divergence? The true divergence or a valid divergence is a divergence that the price action has confirmed. Now, if the price does not confirm the divergence, that divergence is just a warning, whether it is a bullish divergence or a bearish divergence. So quickly, you will only know, so the best approach, what I say to traders is this. So you see a bullish divergence or a bearish divergence, what do you need to do? First thing, acknowledge that divergence. Say, this is a divergence, this is a bullish divergence, this is a bearish divergence. That's the first thing that you need to do. All right? I'm going to color that into orange. That's the first step. The second thing that you need to do is to wait for the confirmation. All right? That's the second thing, very important. Now, the reason why a lot of traders sometimes they see a bullish or bearish divergence, they sell or buy, and they end up losing is because the main reason is because they don't wait for that confirmation. So as I explained to you, a true divergence is a divergence that the price has confirmed. So we need to be a little bit patient when we see a divergence. All right? Very, very important. The next thing that I will say to trader is this. The third step is this. So you see the divergence, you acknowledge the divergence. The price confirms the divergence. What is the third step? Use multiple time frame trading method to trade it. This is about trading true divergences like a pro. Because if we do not use different time frame, multiple time frame trading methods, or a top-down trading method, if we do not follow the third step, we will make a mistake. So you may see sometimes that you see a divergence, you acknowledge it, you say, George, I've done that. All right, the price confirm the divergence, you say, George, I've done that. But if you just buy and sell after the second step, that's wrong. There is a third step, use a top-down trading method to trade it. So some trader may say, George, that's all you were about to talk about today? And I will say to you, no, wait a second, stay with us, please. Please stay with us, please stay with us. All right? So you want to know, all right, how to recognize. So what I'm talking about now is how to trade it, all right? So you acknowledge it, the price confirm it, then you use a top-down trading method. That's how you trade a true divergence. So the next question is, how do you recognize that this is a true divergence? How do you know that this is likely to be a true divergence? Because the divergence is a warning, so we acknowledge it. But now, how can we quickly have a bit of idea that is more likely to be a true divergence than a false divergence? This is where, okay, I come in, my friend. That's why we are here, all right? So the first thing that I want to say to traders, or as I told traders in the first part of the video, how to, all right, pinpoint a false divergence trading signal. You already know it. So if you see a bearish divergence in a rising channel, you wait for a confirmation. How does that confirmation take place? So the price in a rising channel, you see the divergence, you cannot ignore it, you will acknowledge it. But the only time that you will sell, if the price is in a rising channel, the price must break below that channel, retest it, and find a resistance on the edge of that rising channel, or prior retesting a median line of that rising channel. Prior finding a resistance near the median line of that rising channel, or prior forming a new lower low below the channel. Those are the time when we can sell after a bearish divergence in a rising channel. In a downtrend, if we see a bearish divergence in a downtrend, we cannot sell, we cannot buy when the price is in that still in that declining channel. That will constitute the violation of the market pattern. All right, we will wait for the price to break above that channel and to form a support above the channel, or the price to form a higher low above that channel, or the price pulling back to retest the median line of that declining channel and finding a support which means break above and retest the top or the median line of the channel and finding a support. Those are the times when we can buy after a bullish divergence. All right. You may say to me, George, I already know that. And I will say to you, stay with us, please. The best time to identify a bullish divergence or a bearish, a true divergence, or the best time to identify or to pinpoint or to recognize a true divergence is when a pattern is completed. So, I'll give you one example of the ABCD chart pattern. If the ABCD chart pattern is completed, so the pattern is completed at the point D. We see a bearish divergence here. This is likely, it's not guaranteed. Doesn't mean that definitely it's a true divergence, but the divergence that we see at the end of a pattern is likely to be a true divergence. Likely, all right? If you see a Fibonacci pattern, so you have a trending first, then a correction, and then the price goes up 1, A, B, C, D, 1, 2, 3, that is, completing either a crab pattern, right, a butterfly pattern, or a Gartley pattern, or a bat pattern, forming a clear meat cut, okay, Fibonacci pattern. At the point when the pattern is completed, you are likely to see a true divergence, whether it's a bearish Fibonacci pattern or a bullish Fibonacci pattern that is completed. So at the time when a pattern is completed, we are likely to see a true divergence. The next thing I want to say to traders is this: financial instruments always are going up to a specific target level. We are likely to see a true divergence when the price hits the specific target level. So in an uptrend price going from a specific support level to a specific target level. You remember how we set a target for the inverted head and shoulder chart pattern, how we set a target for a triangle, how we set a target for a V pattern. If the price hits a target level, how we set a target for using the market geometry. So if the price is using Fibonacci extensions also for a target, if the price is at a target level and we see a divergence, that divergence is likely to be a true divergence. Now, remember that I'm using my word carefully here. Likely, not guaranteed. Not doesn't mean that definitely it will be a true divergence, but more likely to be a divergence, because all divergences, whether true or false, are warning. We need to acknowledge them first and then follow the trading drill. Acknowledge the trading divergence. All right. Wait for the price to confirm it. Good. And then use a top-down trading method. So what I'm talking about now is about how to recognize the divergence, the place where do those true divergences usually occur. We also see true divergences at the end of the multi-way. So this is for traders who understand the area wave theory. So the multi-way is formed of a first, second, third, fourth, and a fifth wave. So this is about the trending phase. So a trend is ending, a multi-wave is completed. We are likely to see at the end of the fifth wave, if the fifth wave is not extended, or after the fifth wave is extended, we are likely to see a true divergence when that multi-wave is completed. So, just to make it easier for traders, what I would say is this, all right? You are looking for a true divergence. Ask the question, is the price at a target level? Yes. All right. Do you see a divergence? Acknowledge it. All right. That divergence at a price target level is more likely to be a true divergence. Okay. Is a pattern completed? Yes. Do you see a divergence? Good. That divergence is more likely to be a true divergence. So we have many patterns in a financial market. All right. The ABCD chart pattern, the ABCDE Elliott wave triangle is a pattern. We have the Elliott wave pattern, the zigzag pattern, the flat correction. So a flat correction is completed. A zigzag pattern is completed. All right. A double tree is completed. A Fibonacci pattern is completed. All right. Now, do you see a divergence? Okay, acknowledge the divergence. All right. If a pattern is completed, that divergence is likely to be a true divergence. Next step, you acknowledge the divergence, wait for the price to confirm the divergence, wait for the signal, okay, wait for confirmation, and then use a top-down trading method to trade it. A true divergence can also be completed after the price move in 3 moves. This is about the minimum price move is free. Now, this is for more advanced traders. Minimum price move is free. You see a divergence after you draw the line, you remember? Do you see a divergence? Yes. That divergence is more likely to be a true divergence. Doesn't mean that definitely you must sell, definitely you must buy, but just remember it's more likely to be a divergence. When you see a divergence, always draw a line. So I want to show you one example here. So this is a bearish divergence. So the best technical indicator for finding the true divergences, in my view, in my humble view, is the stochastic 833. Well, you say, George, I hate the stochastic. I don't want to use the stochastic. Well, but that's the number one role of this. The stochastic is to find bullish and bearish divergences. So it's the number one indicator for trading divergences. You may use the RSI, you may use MACD for trading divergences, but the number one technical indicator is the stochastic 833. So here we have a divergence. Do you agree? So, what is this? This is a bearish divergence. Why? Okay, stochastic. Now some traders may disagree with me because the price did not form a higher low; it formed a lower high. But this is in fact a true divergence because the price. Why this one is straight away a true divergence? Because the price confirming to us the price display a lower high, and we see the stochastic also confirming, okay, the weakness of the price. This is a stochastic confirmation. And it's just a direct signal. You see how the price crashed down? All right. Beautiful. This is beautiful. All right. But normally, I will look for another example of divergence, whether a bearish divergence or a bullish divergence. Yeah, this is a bullish divergence here. You follow me? So the price from this low here, and look at our stochastic 833 from a higher low. I'm here. I have too many lines on my chart. I don't want to remove them yet. So we are here, you see. The price from a new lower low, but the stochastic from a higher low. Do you see now? But this is a bullish divergence. All right, from price from a new lower low at the time when the stochastic from a higher low. All right. So what's going on? You will acknowledge the divergence. Where do we have a true divergence? Is this likely to be likely to be a true divergence? Yes. Why? Because the minimum price move is free. You see here from here, get down one, a little bit up, and down. So advanced trader know that 1, 2, 3. This is the minimum price move is free. So they put the line. They will put their warning line here and say, all right, prior to bullish signal above and prior to bearish signal below. Minimum price move is free. Prior to bullish signal above, bullish divergence. Another thing I want to say to trader in order to identify a true divergence. So if you see A bullish true divergence or a bearish true divergence are likely to take place also at a key level. Why? Because the financial instrument is going from one key level to the next key level. So you can see that this level here, the orange line, is corresponding to this resistance here and also here. This is about risk control. So remember, when we are using a top-down trading method, we are looking first for a trading setup, and then we are waiting for the signal time frame. But if the risk-reward ratio is useless, if the risk is too high, we will not take the trade. So the point I'm making here, that the true divergences usually occur at a key level where the risk-reward ratio is quite good for us because we can hide our stop loss below that key level. So there is a key level at the point when we have that bullish divergence. All right. So apart from the rising channel, if you see a bearish divergence while the price in a rising channel is likely to be a false divergence. But we can also go a little bit deeper by looking at the price structure. Is the minimum price move free within that rising channel? But the confirmation after a rising channel will be the price coming out of the channel, as I told you at the beginning, retest and turn around. Break below, retest, turn around, retesting the edge of the channel, retesting the median of the channel, finding the resistance there, or forming a lower high. Those are confirmation. Acknowledge the divergence, wait for confirmation, and use a top-down trading method. Where do you usually see a true divergence? When a pattern is completed. When we see minimum price move is free. At the end of a multi-wave. All right? The multi-wave, first wave, second wave, third wave, fourth wave, and a fifth wave. Draw the warning line. Always when you are trading divergence, draw a line. You see the divergence, quickly place the line. This will allow you to control the risk. So you are not trying to sell. You are not trying to sell, okay, above that warning line. If it goes above it, pull out. Signal fell, come out. All right. So this is about how to recognize, okay, and trade a true divergence trading signal like a pro. Like a pro means that we need to go to the third step here, using multiple time frame trading method, using a different time frame trading method, using a top-down trading method. Acknowledge the divergence, wait for confirmation, and use a top-down trading method. Where do we see a true divergence? When a pattern is completed. When a price violates a pattern also. When a price violates, okay, a market pattern. I talking about rising channel, price break below, retest, or a declining channel, price break above, retest. A true divergence usually will take place at the key levels. All right. What is the best technical indicator for trading divergence? Stochastic, not RSI, not CCI. Can one use RSI, CCI for divergence trading? Yes, but the best technical indicator is the stochastic 833. So I want to do something very fast on this chart. All right. So for new traders that are trading on the 5-minute time frame, 15-minute time frame, scalping, all right, what you need to do, all right, it says, suppose you say, okay, George, I don't understand the top-down trading method, all right, and I don't usually go to the higher time frame, all right, I'm still learning. At least go to the 2-hour time frame or 4-hour time frame if you are day trading or scalping. Look for a divergence on those time frame before switching to the 15-minute time frame or your 5-minute time frame or 10-minute time frame. Do not just apply what you have learned in this video on the 3-minute, 5 minutes, because sometimes it may not work because of this. You are dealing with market noise on the lower time frame. The best approach is to find first the true divergence on a higher time frame before switching to a lower time frame. So you have to use at least 2 time frame, 1 time frame to find the divergence, another time frame where you will trade it. The best approach, okay, professional trader will use 3 time frame: the setup time frame, the signal time frame, and the low risk entry time frame. So I hope I have answered your question. The true divergence is a divergence that the price has confirmed. All right. So the divergence is also a warning. There's one here again. You can see that, right, from a low and a lower low. All right. Sometimes you may not see a key level, so you may say, George, this one is. So what is we have here? A bullish divergence. Can you see that? So can see 833 doing good job, yes or no? I'm on a daily chart. Can you believe that? I'm not on a monthly chart. Usually I'm on a monthly chart, but today I'm on a daily chart. See here? It's a bullish divergence because the stochastic 833, which is the best indicator for trading divergence. So I'm on a daily chart like this, so I see now this is a bullish divergence. No one can deny that. Probably from a lower low. At the same time, stochastic exhibit a higher low. Are we at a key level? Sometimes you may not see the key level like this. So which tool can you use to find out the key level? You will use what? Fibonacci extensions. Ha 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 ha. All right. Here it is. Let's see. We are at 161.8% Fibonacci extension level. It's a key level on a daily chart. So sometimes you may not see the key level as I show you here, but that key level will be just a hidden key level corresponding to a Fibonacci extension level. So what I've done now, you can see price went down from here to here, and then rally up a bit without coming to the beginning. I apply Fibonacci extension to this section here, and the 161.8% Fibonacci extension level is here. Now, it's a hidden key level. Stochastic 833, my number one stochastic setting, exhibit a bullish divergence. What do we need to do? So we see now this is divergence here. Okay, it's at a key level. So you say, George, yes, it's at a key level. Good. All right, so what do we need to do? We acknowledge the divergence. Next thing, what do we need to wait for? The confirmation of that divergence. Why? Because it's a warning. So the stochastic is telling us that, look, George, this price action is too much. It went down too far. It's likely to bounce up. So we acknowledge it. We are not going to ignore it. All right. And also, if I go a little bit deeper, I will say 1, 2, 3. Again, minimum price move is free here. All right. After the bounce up, he did 1, 2, 3. So you will say, John, where is that confirmation? Well, the confirmation, my friend. Here it is. So there's this bearish trend line you see here. This high, according to this high, we have that bearish trend line. You don't want to ignore that. So the best place to buy is above that trend line here. But the price did confirm that there is a divergence by displaying this higher low here. So bullish divergence followed by a higher low. This is a high probability trading setup, provided that the common center line of this move down, because the price wanted to be vertical here, I can't draw. So it went up before pulling back. As long as the pullback, the common center line is kaput, the second currency bar that went up a bit, we will start applying our top-down trading method because we have a confirmation. But again, we need to manage the trade carefully here because we are still below that trend line. So sometimes may say, George, it's a little bit too much for me now. It's a little bit too much for me now. Well, this is it, okay? So I hope I have explained to you exactly how you can recognize and trade a true divergence trading signal like a pro. So to summarize this video, all right, first thing first, how do we trade it? We acknowledge it, so we see, so we acknowledge it. There's a divergence, there's a bullish divergence, there's a bear divergence. We are not going to acknowledge it. Second step, we wait for confirmation. Third step, we implement a top-down trading method. How do we identify or recognize a true divergence? After a pattern is completed. Fibonacci pattern, Mochi wave, Corretti wave, Elliott wave pattern, fractal pattern, minimum price move is free, a pattern is completed, we are likely to see a true divergence. What is a true divergence? A true divergence is a divergence that the price has confirmed. They usually occur at a key level. Some key level can be hidden, and those hidden key levels are Fibonacci extension levels. Talking about market patterns, if the price is in a rising channel and we see a divergence, we acknowledge the divergence but the price must break below the rising channel, retest it before we can sell, which will be the confirmation of the divergence. If the price is still in the divergence, it is the rising channel, we see the divergence, we want to sell, we want to be careful. On the other hand, if we see a bullish divergence in a declining channel, we need to be careful. All right? Price must come out of that declining channel before we can start talking about the confirmation of the divergence, because all divergences are warning. Alright, the best technical indicator is the stochastic for divergence trading. Why? Because the number one role of the stochastic indicator is to pinpoint valid divergences. And I use the stochastic 833. If you want to learn more about the stochastic trading or divergence trading, go to www.stochastic-money.com, have your favorite drink, sit down, relax, open our website, click on stochastic trading, click on divergence trading, and learn to master, divergence trading. So this we conclude our discussion today about how to recognize and trade a true divergence trading signal like a pro. Like a pro means do not forget to use a multiple time frame trading method. Have any question or suggestion? Feel free to put in the comment section. I always read the comment, and in due course I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us those thumbs up. You think that, George, well, I'm not convinced with those blah 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 in a funny accent. Well, mark it down. That will put me under pressure to improve my next recording. However, if you find that this video is an essential tutorial, feel free to share with your friend, okay, on Tumblr, on Twitter, on Facebook. All right, that will be very helpful to us. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to recognize and trade a true divergence trading signal like a pro. I need to remind trader that we are recording this video today because a trader has asked a question in a comment section, and we are now answering that question. In fact, the trader did ask the question at 24 Earlier Wave YouTube channel, but because I'm talking about divergence trading at 24 Stock Trader, that's why I'm posting a video here. With that one single comment, we recorded two videos. The first video was about how to pinpoint a false divergence trading signal, and the second video, this is it, about how to recognize and trade a true divergence trading signal like a pro. So do not hesitate to put a comment, ask the question. I know them down. I have a book. I know them down. And in due course, all right, surprise, surprise, you say, yes, I thought George has forgotten my question. Here it is. And if I have forgotten your question, you may remind me again, or I may answer you directly in the comment section, all right, and that will be the end of it, all right. So thank you for watching, and speak to you soon.